Well, good afternoon and welcome to Midcap Radar. I'm Vivek Iyer and with me today is Reema Tendulkar. Good afternoon, Reema. It's another session where we're actually seeing the broader end of the market is doing very well compared to the frontline indices.
Indeed, the Midcap Index is up more than about 0.5%, outperforming the Nifty and the Sensex as key indices have now fallen to the day's low. Consumer healthcare stocks gain while realty and IT stocks exert pressure.
Zomato zooms nearly 5% after JP Morgan issues an overweight rating and raises the target price to 340 rupees a share from 208 earlier. Says the company is spearheading a rapid retail consumer transformation in India. Also, Chola investment gains after Goldman Sachs initiates coverage on the stock with a buy rating and a target price of 1,786 rupees a share. Says the company is scaling up non-vehicle finance business and that should help reduce cyclicality.
And Ola Electric CEO Bhavish Agarwal tells CNBC-TV18 in an exclusive chat that the company has been working on three-wheeler and could launch a product soon. Attributes the loss of market share to peers getting their act together on EVs as well as sales aggression. The stock surges 5%.
Allied Blenders in focus as it invests 70 crore rupees in a joint venture with actor Ranveer Singh's entity for premium spirits business. Also, Dilip Bilkon emerges as the lowest bidder for tunnel construction project in Kerala worth 1,300 crore rupees. The stock is up nearly 2%.
And Raymond Lifestyle shares fall after a stellar listing at 3,030 apiece. The company, remember, was demerged from the parent company in June this year.
Well, welcome to Midcap Radar. Like we just mentioned, a lot of buzzing stocks, especially from the broader end of the markets. The small cap index today up almost 1% on a day when you're actually seeing the benchmark struggle in the session. One pocket of the market that's done very well today continues to be the pharma pack. So if you look at some of the pharma companies, names like Laurus Labs, names like Granules, all of them today continue to move higher. The other pocket of the market that's doing quite well, in fact, doing very well this entire week, is actually the housing finance companies. And this is ahead of the Bajaj Housing Finance IPO. So if you pull up the one-week charts of names like LIC Housing Finance, PNB Housing, and Aadhar Housing, all of these stocks have done very, very well.
Well, they are being offered at, Bajaj Housing Finance is being offered at a premium to some of the peers. So maybe there is a little bit of a catch-up valuation re-rating that we're seeing. But what's not doing well in the market are many of the CPSCs. In fact, the Nifty CPSC index has declined for the fourth day in a row. And today you're seeing a reversal in Oil India. It was a big mover yesterday, big gainer. Today, 3.5% gone. Mazgaon Docks, Chambal Fort, BEL, BHEL, RVNL, IRFC. These are some of the stocks which are seeing a red tick. But let's get to our Midcap Movers segment. Hormus is now joining in to take us through that list. Hormus.
Well, action certainly lies in the small cap space ahead of this all-important weekly expiry for the index. There are plenty of stocks on the gaining side today within the broader markets, and we'll start off with those gainers there. Gujarat Fluorochem is one of those among the top gainers within the broader markets. Now at the highest point of the day, up 10% in today's session, as is Kaplan Point, now 9% higher. KC International at one point was up almost 7%. It's cooled off from the highs of the day, but still trading with gains of close to 4%. And Vijaya Diagnostics having a good day at the office. Speaking of diagnostics, and pharma players are in the pink of health in today's session, as Vivek just mentioned. Syngene, Laurus is at a 52-week high today. Fortis is at the highest point of the day, and Ipca Labs is also doing well in today's session. PSUs are having a bit of a mixed day, but the tilt is more towards the downside. The Oil India now at the lowest point of the day. BEL, Mazgaon Dock, one day up, one day down. That trend has begun for these shipbuilders as for Garden Reach. So some bit of profit booking coming in there at higher levels, or even exiting at higher levels. For stocks that are doing well on the back of volumes, Linde India on the back of news flow. Sunteck Realty is up 4%. JM Financial and TVS Supply Chain has seen a bit of a spike over the last few minutes, up 5% now on very strong volumes. And lastly, stocks that are bucking the trend in today's session, at least within the broader markets on the downside. CCL Products, Prestige Estates has raised money through the QIP, but the allottees are yet to be known. And PCBL not having a good day after a stellar move in the last 1 month.
Thank you so much, Hormas, for highlighting that long list of movers from the broader markets today. Let's now welcome Samit Chavan from Angel One for a technical check on the market. Good afternoon, Samit. Thank you so much for joining us. How are you looking at markets at the current state?
Good afternoon, Vivek. See, market is not having a clear momentum as such. There is no major momentum. Fortunately, we are not getting impacted much, on the global development that has been happening. The hiccups that we have been witnessing in U.S. markets. Fortunately, we are not, as of now, we are not getting impacted. But you never know when uh, 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 they will start reacting to it. So this some sort of risk will continue to loom over, and hence, our advice would be to stay light at least with the short-term view. One should avoid getting into heavy high beta names aggressively. So one should avoid aggressive bets on both sides. So as far as levels are concerned, we are seeing important support for Nifty around 25,080 to 25,000. First sign of weakness would come below 25,000. If Nifty stays below 25,000, then probably we could see immediate correction of 300 400 points in Nifty. Whereas on the higher side, 25,300 to 25,500 would act as a very strong resistance. So till the time we do not get decisive close beyond 25,500, we are likely to see some selling pressure at higher levels.
Sameet, hi, afternoon. What about individual stocks? Where would you recommend a trade today?
Afternoon, Rima. So we would have mixed bets. One would be on the long side, and one would be on the short side. On the long side, if you see, Titan has been buzzing since morning. Overall, if you look at its structure, the stock has already continued its higher highs, higher lows in daily time frame charts. Today, it has given a decisive breakout along with sizable volume. So we expect Titan to continue this outperformance. As far as levels are concerned, any depth 20-25 points depth would be a good buying opportunity. One can keep a stop around 3625, and we would expect the stock heading towards its previous highs of 3860 quite soon. On the short side, we have already seen a massive rally in most of the defense names, but in last 1.5 months, we have been witnessing some consolidation happening in this name. So BEL is a one stock, it's on the verge of a breakdown on daily time frame chart. So on the short side, we like BEL. Clearly, with a short-term view, a profit booking is evident. 284 is the immediate level to watch out for. So as a short seller, one can keep a stop around 297, and on the downside, the target would be 284.
Thanks so much, Sameet, for joining us and giving us your view on the market as well as your short-term technical picks. Let's now slip into a short break. On the other side, we get you excerpts from a conversation with the management of REC. Stay tuned. Welcome back to Midcap Radar. Well, as promised, we told you about the conversation we had with REC. REC management told CNBC-TV18 that they have seen considerable improvement in efficiency of discoms and hope that problems faced by discoms will be resolved by 2026. My colleague Abhimanyu caught up with Vivek Kumar Devagan, the chairman and MD at REC, to talk about the health of discoms and the sector outlook. Listen in.
With the introduction of revamped distribution sector scheme and notification of late payment surcharge rule by Ministry of Power, there has been considerable improvement in operational and financial efficiency of the distribution company for the last 3 years. Since RDS is going to continue until the year 2026, we hope that a number of problems being faced by discoms would get sorted out, like the government department dues are getting liquidated, legacy subsidies are getting liquidated, the AT&C's losses are coming down quite substantially. In 1 year, it came down from 22% to 15.8%. Similarly, the state governments have started paying the distribution companies quarterly subsidy in advance. Like for Q2, subsidy they already paid to Discom in Q1. With the improvement in the health of the distribution companies, the financial health of the generation company and transmission companies are also improving, because distribution sector is the sector which collects the revenue from the consumers and it pays to the the generation companies and transmission companies.
Also, speaking of several new initiatives, like the government had earlier indicated about market coupling, also smart metering is being looked at. What is your view on these initiatives? Where do they currently stand, and what kind of changes do you feel they are going to bring in as far as India's power sector is concerned?
this installation of prepaid smart meter is going to be the real game changer in the distribution sector. The consumer would be paying in advance, like prepaid mobile connection, they'll be paying for the electricity in advance. That will improve the collection and billing efficiency of distribution companies quite significantly. We hope that the losses being incurred by the distributing companies will be reduced to a large extent, and they'll be turned around as the distributing companies, they'll be start working in the profits.
Speaking of other initiatives, as far as expansion is concerned, what kind of expansion plans are being looked at within the power sector, within the power PSUs? Do you feel there can be more focus on renewable energy projects, even as several of them are getting more profitable and the cost of power is becoming almost equal or even cheaper compared to thermal power at places?
Yeah, energy transition is going to play a very significant role, as India aspires to install about 500 gigawatt capacity of non-fossil fuel-based electricity capacity by the year 2030. Right now, we are at the level of about 200 gigawatt capacity. Another 300 gigawatt capacity has to be installed in next 6 years. That is going to play a big role. Along with this, renewable energy is intermittent in nature, will also require commercially viable storage technology, be it pumped storage hydro projects or battery energy storage. And if possible, if technically feasible, the hydrogen fuel technology could also provide a good storage solution. Plus, new technology area like green hydrogen and green ammonia are coming up. The challenge is how to bring down the cost of production of green hydrogen, say about from $5 to $6 per kg to say $1 to $2 per kg. That is the technological change, and we hope that a lot of effort is going on and we'll be able to bring down the cost of production of green hydrogen.
My final question to you, you spoke about renewable energy being intermittent at times, and that of course increases the need for base load, base power, and thermal energy continues to be the mainstay in that direction. Yeah. Do you feel apart from storage capacities, there can be other sources within renewable energy itself which can possibly serve as alternatives to base load like hydel power or even any other source of energy?
Yes, these pumped storage hydro projects, they are going to play a very significant role, and it would be better for a country to go for more and more pumped storage hydro projects, because we won't be dependent on the import of the batteries, because lithium ion resources we don't have the control. Most of the batteries are getting imported in the country.
Welcome back. The Midcap Index is at the day's high right now. It's a 350-point gain on the Midcap Index, so that's looking good. Ola Electric continues to rally hard, so now 6.5%. When we had that interview with the management, the stock was up close to about 3.5%, but it's added on some more heft since then. You've got a gain coming through in restaurants. Brand Asia, the owner of Burger King, that's seen a spike up. GMR Airports too is moving up quite smartly. But let's get you another corporate conversation. So India is one of the markets with the most opportunities in the next decade. That's the word from DHL e-commerce's CEO, Pablo Ciano. In fact, while speaking with my colleague Vamakshi, the CEO also went on to say that India stands in the top 15 geographies in terms of revenues for the group. Listen in.
We see India as one of the markets with the most opportunity in the next decade. We have been in this market for many, many years, but what we have seen recently in terms of, first, the benefits of the migration and the diversification of supply chains out of China into other markets. India, together with Mexico, Vietnam, Turkey, is one of the key markets benefiting from that. And we see every single day more of our global customers opening operations in India. We have seen, of course, a lot of manufacturing moving away from China into India, and we see that continuously. We see that to continue. So there is a lot of good momentum in India, both from an import and export perspective, and from a domestic perspective, the entire improvement in infrastructure, roads and airports is helping optimize logistics. We're seeing more and more of the logistics moving from informal ways of logistics to more formal with companies like DHL and Blue Dart. And the entire investment in infrastructure that the government is promoting is helping with a lot of that. Roads are getting better and better. It is much easier to connect now distant cities and tier 2 and tier 3 cities, which is helping overall reduce the cost of logistics, make it more affordable, and therefore more efficient for companies.
So you see huge potential in India, got that. So are you looking at expanding your operations here?
Yes, we have. We have recently announced in one of the DHL group divisions, DHL Supply Chain, we have announced a 250 million investment to expand our fulfillment capabilities and contract logistics in India for the next 5 years. We are also in the process of expanding within Blue Dart, our domestic operations, also with a similar type of investment. We have expanded our air capacity. Last year, we added 2 additional 737 freighters for India for Blue Dart air network. So now we have 8 in total. And we are expanding our ground and surface infrastructure as well. We're going to be opening 10 major metropolitan hubs in the next 3 years. And we are expanding all our ground capabilities as well. So a lot of investment going on in India from a group, DHL group perspective, as well as Blue Dart perspective.
Like you mentioned, you are increasing your investments in India. So obviously there must be a certain growth potential that you see here. So could you quantify that for us?
Absolutely. So from a group perspective, we believe that India is going to be one of the fastest growing countries for the next 5 years. Today, India is top 15 in terms of revenue for the group, as a group, and we believe that in the next 5 years is going to be at a minimum top 10 and above. And there's a lot of investment, as I was mentioning before, not only domestic, but also, again, imports and exports. We are aiming for a very aggressive growth plan in India from a Blue Dart perspective, where we are planning to go faster than the market. Our market in the markets where we operate is going to be growing around 10 to 12%. We are planning to grow faster than the market for the next 5 years, and we are investing accordingly.
Sure. So, if I look at the data, since 2020, Blue Dart Express has grown at a CAGR of 14%. And this is the top line that I'm talking about. So, will the growth be much better than this, is what you're saying?
The growth is going to be slightly better. We need to remember that in that CAGR, we had a very unique situation, which was COVID, which, of course, required a very special type of logistic capabilities for many companies. But we are confident that between the growth that we are already experiencing and that we are going to see very likely accelerating in e-commerce, logistics for e-commerce, as well as the great positioning that we have in the B2B segments in life science, healthcare, automotive, in particular for the air network, and also the cross-border, India becoming an exporter of e-commerce and exporter of finished goods. All of those are very important sources of growth. That's why we are confident that we're going to see either similar growth to the CAGR that you have been referring to or slightly better.
But what about the competition that is coming from quick or rapid commerce? Because that is seeing tremendous momentum here in India. So would just like to understand from you, is it eating away into some of your e-commerce deliveries? And what is your strategy with respect to tackling this new business model that has emerged?
Absolutely, great question. Quick commerce plays in a little bit of a different category compared to where we operate. So a big retailer from global companies like Inditex to smaller garment companies like Snitch, which is a new and upcoming very trendy brand who I visited a few days ago. They need to rely on an efficient logistics partner that has the ability to receive thousands of shipments in a centralized location and be able to distribute them around India in as fast as possible in the most affordable way. And that is a very different business model compared to what the quick commerce is working on. Quick commerce will satisfy a certain percentage of the consumer needs, but the majority of the market is going to remain in the other type of logistics requirements that I was referring to.
Well, some very interesting comments and very strong commentary, especially as far as the Indian market is concerned, from Blue Dart as well as the DHL CEO. But that's all the time we have on this edition of Midcap Radar Mutual Fund Corner. When we return.